Welcome to another episode of Equity Mates, first for the week. Always excited to be here. My name is Bryce, and as always, I'm joined by my equity mate, Ren. How are you going?
I'm very good, Bryce. Excited for another week of AusBiz. We're trying something a little bit different this week.
That's what we do?
We do. We want to play with the format. But before then, you said your gusto on AusBiz would live or die by...
Mate, you said my gusto.
by the Essendon Bombers. Another loss.
Another
so
loss.
Can we expect another flat week from you this week?
Look, it would be poor form from me to let this show suffer on the performance of Essendon. So no high gusto from me.
It would be a long year on AusBiz.
It would be.
But look, as we said, we're going to try and do something a little bit different in this week on AusBiz. Normally we do 4 episodes, each distinct on different topics, speaking to different experts. But this week we want to try and do a long form interview spread out across the 4 episodes of the week.
So we have brought in an expert that we're going to spend, as Alex said, the next 4 episodes interviewing all about microcaps. It is our pleasure to welcome Gino Ross to the show.
Thank you.
Gino is portfolio manager of Spheria Global Microcaps Fund. Did I get that right?
You did.
Nice.
I'm glad to be a guinea pig on the show.
Look, you'll nail it, Gino. So we're going to be touching on the why when it comes to microcaps in this episode. And then over the rest of the week, we'll be doing microcaps in Australia versus the world. Obviously, we will have a Watchlist Wednesday.
We've managed to keep Watchlist Wednesday in, yes.
And finding gems in the microcap universe and the investment process that Gino goes through to uncover some hidden gems. So, shall we get stuck in?
Let's do it. So, as Bryce said, we want to start with why microcaps. Help people understand what we're talking about, and then why you think it's an interesting opportunity for investors.
Sure.
So let's start with definitions. How do you define a microcap stock?
Yep. It's interesting, when we set this fund up back in 2019, and we're thinking about it several years before then, it's interesting, very few funds offer a global microcap, not just in Australia, globally, which we found really odd given the opportunity in the space. But our feeling was most people would define market cap as under US 1 billion. Right, so when you're talking globally, everything's bigger. I mean, obviously, Amazon versus in Australia, BHP, Combank.
Yeah.
And so micros being under US 1 billion is more akin to what we would think of as small caps locally. So they're actually reasonably big companies, but in a global context, they're minnows. But in Australia, microcaps tends to refer to very small, early stage.
I was going to
companies.
say, in Australia, it feels what would the market cap I guess be in Australia?
It does vary, but for our guys, we tend to think of it as under US 400 mil.
Okay. Yeah.
So 2.5 times the size difference. Yeah.
And just to get people sort of to understand the scale of the universe, how many stocks are we talking about that are in your global under $1 billion market cap universe?
It's a staggering number. There's 16,000 stocks just between 50 and 50 mil in a bill.
Wow.
And that's just developed markets. We only invest in developed markets.
Yeah, right.
So we're not even counting all the emerging markets out there. So 16,000 is pretty staggering number to trawl through, but it's very exciting to have that opportunity. Yeah.
So we'll get to the investment process a little later on in another episode, but there's no doubt that microcaps offer a lot of opportunity and excitement, as you said, within our community and broadly. Why are microcaps, or why are they perceived as being potentially quite lucrative, and what excites you about them?
I think it's just finding them before anyone else does. So it's a combination of 2 things really. Firstly, they grow faster over the long run. Data we've got going back to I think it's the 40s in the UK and the 50s or 60s in the US shows microcaps are the best performing segment over smalls and large. And it makes sense, they're growing off a low base, so it's much easier to grow when you're small. They don't have all that bureaucracy weighing them down. One thing we notice is the founder is often still involved driving the business. So underlying business should do better, but then also they're not discovered. So your average microcap has very little sell side coverage and attention from the buy side as well. So it's that opportunity to get something early that's growing faster, isn't discovered by the rest of the market. You know, that's the real opportunity in micros, which makes it so interesting. And you know, in Australia, we do have some use the term overbroked. We do have a lot of brokers down here, but you know, it is not unusual for us to come across companies overseas with no coverage or one local broker covering it. And sometimes these companies are a reasonable size.
Yeah. So when you think about microcaps, you know, you said they're fast growing. I imagine a lot of them aren't profitable and are, you know, trying to find their business model in some cases still.
Yes.
Trying to find, you know, product market fit in some cases.
Trying to find themselves.
Trying to find themselves. Trying to find their team in some cases.
This is deep.
When we talk about, you know, the analytical process of investing, a lot of the experts that we speak to are normally talking about how they analyse the bigger end of town, the bigger stocks, the more well-covered stocks. When you think about approaching the microcap world, does your thinking have to change, and does the way you approach these companies and I guess the metrics you're looking for or the ways that you research these stocks, is there any major differences?
It's a good question. I think many people would say yes. Whereas in some respects we say no, in that as opposed to most microcap managers, we're actually quite stringent about how we invest, and our process is very tight. So we actually employ very much a large cap type philosophy, that we do a lot of work. We focus on fewer stocks. So a lot of microcap guys would say we kick a lot of tires and meet with a lot of companies. We do the opposite. We actually focus on only the companies we want to do a lot of work on. More generally though, yeah, I mean, these businesses are you know, more susceptible to economic gyrations and exogenous shocks. I think you do have to be more careful in terms of the accounting, you know, who the management are, because they're not proven and well known yet. And some of these businesses just aren't as robust, so you do have to be more wary of the risks. So yeah, I think more generally it is about, I guess, being more aware of the risk. Yeah. But you know, certainly our approach is to invest in a similar manner. We still care about fundamentals, the industry, you know, the cost base, you know, how we forecast the company, and we do a lot of work as a large cap analyst would on these stocks.
When you say you run a more concentrated portfolio than most micro cap managers, how many stocks on average would you have in our portfolio?
We tended to have about 40 to 50, whereas of the few peers out there, they tend to run well over 100. And they seem to have more of a quantamental approach, so they're not doing fundamental research on each stock. So yeah, it is quite different to what is out there as far as we know.
So you mentioned there that a lot of these companies don't get a lot of analyst coverage, and it can lead to a lot of retail investors obviously not, or missing out on the opportunity until it's far too late. Do you have some examples of some stocks that started out as micros, had no analyst coverage, and have since now become household names and incredibly sizable companies?
Yeah, I mean, there's quite a lot of examples. I mean, Netflix traded as a microcap. Activision, that you might know from gaming, was a microcap once. You know, Monster Beverages is a good example there. You know, a very large company now, and Coca-Cola took a stake in it, probably 10 years ago now. And you know, Monster Beverages sort of just sat along at 100 mil market cap, not really noticed by anyone. One analyst picked it up and sort of then dropped coverage, and it just went nowhere for a while. And then over the course of about 3 years, its market cap went from 100 million to $1 billion.
Yeah, wow.
And then suddenly you start to see the number of analysts looking at it just you know, go to 10 and onwards. So it's often that great early performance that gets the market interested. My favourite example of all is Home Depot. You might know Home Depot. It's effectively like the Bunnings of the US. How's that not a good business? But you know, if you'd bought it, I think it was 1981, September 81, it floated at $12. And if you'd owned it till now and reinvested the dividends, you'd get 27% per annum since 81. Like, it's just phenomenal.
That is unbelievable.
But as a microcap, it was doing just shy of 60%.
Wow.
Right. So again, you know, so I think a lot of people know that, you know, to buy great businesses and hold them over the long run is great, but you know, I think not as many people appreciate that if you can get them early, that's when you're going to do particularly well. Because again, it's that growth of a low base.
Yeah.
So is there a part of it that's you just hoping that it gets picked up at some point and the market starts running with it? Like how long do you wait before?
It can also be corporates. One of our most successful stock was Collectors Universe. It was a US company. They do coin grading and trading card grading. And interestingly, during COVID, people bought and they've gone in their cupboard and noticed these baseball cards and basketball cards, and that's really picked up enormously. But why we liked it was you had no analysts covering it. Huge barriers to entry. You had 2 coin graders. They're almost a monopoly in trading cards. Reasonable sized markets, and if you want to transact online, you need it to be certified, right? I can't buy a coin sight unseen. I need someone to tell me, hey, this is the quality or the grade that I'm paying for. Cash flow is great, returns are huge, net cash balance sheet and no coverage. Now, what happened there was it got taken out, corporate. So sometimes a corporate will solve the problem for you. But we're fine. We are genuinely long-term investors, so it doesn't bother us that no one covers it. We actually asked the CFO, I noticed you're not covered by anyone, thinking about. He goes, oh yeah, we'll get around to it, but company got there first, so we're happy either way.
Yeah.
And a lot of our companies pay dividends as well. So
yeah, right. You wouldn't expect that in a portfolio of microcaps.
No,
yeah.
the index has a very low dividend yield and very low free cash flow yield. And that's one thing that differentiates our portfolio. We kind of describe it more as a sleep at night, in that they have good balance sheets, good cash flow, good dividends, and valuation support.
Yeah.
So it's not as racy as a lot of the companies out there, but it's more a sleep at night. It's a slow burner, and we think the right approach longer term.
Yeah.
Yeah, it's fascinating.
Hearing you talk about how important analyst coverage is to then increase the price of a stock, it feels like the analyst industry has it backwards.
Yeah, I was just thinking.
We don't need another analyst on CBA or Woolworths. We need more analysts trying to find the microcaps.
That's what Equimates is going to do.
Yeah. Is analyst coverage though is that the number one thing that drives those returns? Is that when you start to see the multiple increase and the valuation increase?
It does, definitely helps. Yeah, it definitely helps. Because for us, I can speak from our perspective, if there's no analyst coverage or even one analyst, we do all the work. We're the ones going through the reports. We're the ones talking to people in the industry. We're the ones doing all the work. Whereas for a large caps, here you go, spoon feed you. And then the game is a bit different. It's about trying to get rid of the noise and looking where consensus is. And whereas for us, it's about doing that fundamental analysis.
Yeah.
And the fact is, these microcaps can't pay the banks, right? They're not going to. They're going to do a raising of 50 million. They're not going to do a raising of billions. They're not going to take over a massive company, and so they just don't get the same interest from the investment banks.
Yeah.
But it is good for us, and it's enjoyable too, to just do our own bespoke work.
Yeah, that is the thing. Looking at microcaps gets you really excited about the opportunity set and thinking about what they can become. It gets you really excited about investing.
No, it's we're so lucky. I love running this fund because we get to look at companies no one else has heard of. We get to do our own work. We get great access to management because again, even a Hamish Douglas would struggle getting access to some of these top companies. Whereas, we get excellent access to these microcap companies.
Gee, more access than Hamish Douglas. Must be nice.
That's the name of this episode.
Well, Gino, we have run out of time, but we've understood the why of microcaps. In the next episode, we're going to take a look at microcaps here in Australia versus the rest of the world, given that you are a global fund.
Great.
So we'll pick this back up tomorrow. For more information on Equity Mates, you can head to our website, equitymates.com, or you can shoot us an email at contact@equitymates. But otherwise, Ren, back in tomorrow.
Yeah, can't wait.